Good morning and welcome, or good afternoon, in fact. No, it's good morning. A very warm welcome to the TaxCalc MTD Basecamp. We are nestled on the leeward side of Mount Ogilvy, and this is where we can gather and draw breath and make sure that we're all equipped to reach the summit by April next year. I'm Andy North, and I'm joined by our Sherpas. We've got Robin Milstead and Tom Bickl, who are the twin engines of the MTD project, and they're going to help navigate the path ahead. And also Nick Moss, TaxCalc's head of pre-sales, who can step in if any specific software questions come up about Engager or TaxCalc. Robin, do you want to share just a very little bit about MTD therapy in case anyone who hasn't discovered you guys as yet?
I would love to. So MTD therapy started on the TaxCalc webinar back in February, talking about MTD. Got a little bit excited in the chat and decided that what we could really do with is some chatting about MTD between us. I expected maybe 5 people would join me, put my phone number in the chat box, thought 5 people would join me, and we've peaked at about 600 people in the group. So we're a WhatsApp group that has daily discussions on MTD, and through that we've learned loads. We've had lots of help from software people such as yourself and professional bodies, and it's really just about learning and making sure that we all feel prepared whether we like MTD or not.
It's a lesson in not getting carried away during a webinar, isn't it, Robin? That's really...
Yeah, I've been quite busy for the last 10 months.
The one post you regret doing the most is just that I'm going to start a group. But anyway, it's wonderful that you guys have done what you've done. It's a real tonic, I think, and we'll allow you later to indicate that you might want to join up to the MTD therapy project. But what is Basecamp? So we designed this as a safe space for any accountant or bookkeeper if they're not feeling quite at ease with their preparation for MTD. Over the past couple of years, there's probably been thousands of hours of webinars and events, and we've all been to them, that have been focused on MTD and preparedness. And a lot of firms are kind of well on the road towards a smoothish transition. But we always get questions. So we know that there are very many yet to have really sort of break the back of the project. I think all of us have been approached with questions about, basic what income types are included, etc. Even in the last couple of weeks. So we wanted to put this on just to provide a place where no question is too basic. All questions are welcome. So we're going to kick off with a run through of the basic concepts, and then we're going to open up to questions from the floor. Just a little bit of housekeeping. You will be able to watch this back, so you don't necessarily need to take notes, but you're more than welcome. We've got some polls, and there's 2 in the bottom left corner of the screen. You'll be able to see the chat, which some of you are already very friendly style, saying good morning to each other. That's for you to chat amongst yourselves. You can post comments in there. We may see them, but it may get quite busy. If you've got a burning question, put that in the Q&A, or the questions box, where we will see that, and that's a little bit more curated, and we can make sure that we see your questions. As I say, no question is too simple. Do not feel embarrassed. Do not feel ashamed that you don't know the answer to these questions. This is exactly what this session is for. So before we start, I would like to just open up with a quick poll, because I'd like to understand which of or how confident you are right now about your MTD journey. So I've just put that live. If you hit the polls question, that should be showing up now. Is that showing up? Have I done that correctly? So if you could just indicate on a scale of 1 to 10, where 10 is I'm really confident, I don't think anything's going to go wrong, I've got it nailed, and 1 is I'm really kind of novice at this. Just let us know, just so we can get a sense of where everybody is, and we will take a look at that. So yeah, what's your sense, by the way, guys? I mean, what would you say the majority would fall into, do you think, if you're the people that you've spoken to?
We ran this poll recently on the group, and I think the answer was sort of an average 6 or 7. I think we tend to be ahead of the curve, though, because we have spent the last 10 months looking at a ton of messages on MTD. So yeah, looking at the poll results at the moment, it's looking sort of midway, and I would suggest that's probably about right. People
Yeah,
know
we've got
a little bit.
five is creeping into the lead. They're an average, so not completely confident, not completely novice. There are a number of people who really are coming in at the low end, and this, as I say, this is very much for you. Want to make you feel comfortable with all of this. So with that, I'm going to hand over to Robin and Tom for kind of the basics of MTD, and you've got some slides to share.
Yeah, let me share those slides. There we go. So we've already introduced MTD therapy, accountants therapy. So MTD therapy also spans into different discussion groups as well, which is why we're also called accountants therapy. I've introduced myself. You have to excuse me, my internet is really playing up this morning. So I've already said that I started the group in February, but we haven't said hello to Tom yet. Tom is my partner in crime with MTD therapy and beyond. He'll be taking you through some of these slides as well. And of course, for the slides, we have our favorite Taxi McTaxface to help us understand what's going on with MTD, that cute little analog radio there.
Demonstrating the digital age with an analog radio.
That's a role.
So Tom, start us off.
Yeah, so we're going to go through the 5 W's of why, what, and who. Now, we're not going to get into whether it's right that MTD is being introduced. It's kind of a null point now. It is happening. We've all got to get ready for it. But the reason why the revenue we're bringing this in is to reduce the tax gap fundamentally. If you saw the 23-24 report, they believe that tax gap is at about 5.3%, which is about 46.8 billion. So it's quite a significant sum of money. And they think MTD is going to help chip away at that because small business does contribute a lot towards that gap. The systems that HMRC have got, as I'm sure you'll all agree, are ancient. You know, we're talking 30 years ago, self-assessment came in. I don't really think there's been any advancement in the technology they've got there. They want to modernize the tax system and they want to introduce a lot more AI and digital reporting. So if you saw the July roadmap for HMRC, they want by 2030 for 90% of all communication between the revenue and their customers and agents to be digital. Whether that's completely AI or through web chats, I'm not entirely sure, but that's quite a significant chunk. So that's what they want to do. And my final point is they want to improve services to customers. And I'll let you dwell on that one. I'm not going to give any more comments. So what is MTD? Effectively, it's all about maintaining digital accounting records. And there are sort of 2 types of those digital accounting records. Number one is your traditional accounting software, so the browser-based ones, but also bridging software. And I know TaxCalc, you guys have that bridging software offer. You have to send quarterly updates to HMRC, and that is for each source of income, a sole trade and/or property. We've then got to submit a tax return through MTD compliant software at the end of the year. It's also known as an end of year declaration. I just like to call it the end of year tax return. So you do your 4 quarterly updates, then you get to the end of that period and you can submit your tax return. And obviously the deadline for submitting that TR is exactly the same. It doesn't change. And a few comments we keep seeing online is that it is a click of a button. Now, I'm sure if there's any Formula 1 fans or anybody that's driven a car, you can easily turn on the engine of your car, but there's a lot gone into it to get that car into position, get it right, get it working. So don't be sort of falling into that trap of thinking quarter updates, they are going to be a click of a button. You've got to do some work now to get ready for that. Now, talking about the who, it's sole traders and or landlords. And it's really important to note that and or, because unfortunately, if you read some of the recent HMRC guidance, they just use the term and that could be a little bit misleading. So you've got to be careful when making sure that clients and your team understand it's the and or. So that income is combined for qualifying income. Qualifying income, we'll go into that in a bit more detail in a couple of slides, but it is all based on boxes in the tax return. It's based on turnover. It's not based on profit. So it's really important to note that as well. It's being brought in over the next 3 years on a relevant threshold basis. So I'm sure, as you all know, 24-25, if the turnover is over 50, you start from April 26. In your 25-26 tax return, if it's over 30,000, you're in from April 27. And then 26, 27, you're in from April 28 if your turnover is over 20,000. So they expect about 3 million individuals in the UK to fall into MTD over the next 3 years. Now, we're going to talk a little bit in a bit with Nick about opportunity for that for accountants. And that is quite exciting to actually look at what the scope is for us as accountants. And then finally, partnerships. Now, they're not in at the moment, but HMRC has confirmed that in 2028, they're producing a report on how successful they think MTD is. And at 2028, we will know a lot more about what is going on with MTD, who else might fall into it and who might not. So that is the first three. And I'll move over to you, Robin.
Fantastic. I think it's still you, Tom.
Oh, is it?
You got all the W's.
You get to do these ones too.
Yeah, so
No,
we've gone through the when.
I'm wrong. It is me. I'm sorry. This is what happens when you talk about MTD every day for the last 10 months. You lose your brain. So yeah, Tom's talked us through some of the reasons for MTD. What about the actual thresholds, etc.? When are your clients going to be brought in? That works on your qualifying income. So as Tom said, that's going to be income from your sole trade and or your gross rental income, so the turnover from the sole trade and the gross rental income, so before any expenses. And the one that we're looking at the moment the most is that 50,000 qualifying income threshold on the 24-25 tax return. So it's that 24-25 tax return that will tell you whether or not your client is going to be mandated for MTD from April 26 onwards. And that doesn't matter if the rental property, for example, is in the UK or outside of the UK. And again, those thresholds will roll. So it's dropping to 30,000, but that will look at 25-26 tax return. Of course, that's the year that we're in now. So not a lot that people can do about this at the moment. You may want to start thinking about your plan even for those ones that are going to be brought in from April 2027. And then again, the threshold drops to 20,000, which we will look at for the 26-27 tax return, and they will be brought in from April 28. One excellent question we get a lot of is about what happens if someone starts either a trade or a rental in the year. Now, trade's an easier question to talk about because you will have a start date on the tax return for that. The answer for both, though, is that you time apportion. So if somebody had had 6 months of that trade and all that rental, you should double it to 12 months to work out whether or not their qualifying income hits the threshold for the year that you're looking at. Of course, that's a little bit more grey for landlords, as for the 24-25 tax return, at least there's no box to say when that started. So there is actually no way of HMRC being able to calculate that themselves. They are, for 24-25, relying on people being reasonable and signing up if they feel that that qualifying income is over the threshold. But I'll leave you with your thoughts on that one. Okay.
Okay, so do you want to, a few questions have come in already. I'm thinking, let's take them.
Yeah,
so
I think we can answer a few of these quite easily, actually. So
yeah,
Jenny, your question about is the 50k threshold also including foreign property and UK property? The slide that you're seeing at the moment is the sources of income that will count towards the threshold for MTD. So it's all based on tax return boxes. It is really that straightforward. So in TaxCalc, you can actually produce a report that will tell you what clients will have all of that. So that's a really good one to talk to. Well, hopefully Nick will be able to talk us through it in a bit, but that one's quite easy to follow those processes. So question number 2, we've got ones about partnerships. So I don't know if you want to tackle this one, Robin. This is a good one for you.
Sure. So partnership income itself is not in MTD. You're not going to submit partnership income as part of the quarterly update. It doesn't form part of the qualifying income at all. But if you've got a partner that has qualifying income rental or a separate self-employment, they may well be mandated for MTD and have to do the quarterly updates. So their quarterly updates, if you've, I see Amanda has somebody who has a rental property, a sole trade and a partnership, those updates are going to have the sole trade and the rental property, and then the year-end return is going to bring in that partnership. Simple
And
as
there's
that.
separate submissions for the rental and a separate
That's-
submission for the self-assessor for the sole
That's
trade.
correct.
So that's 8 in a year.
Exactly. Worth mentioning that quarterly update is just one quarterly update when we talk about penalty points, which we'll come on to later, but it is made up of different parts potentially. So you may well have more than one submission included in that quarterly update. So where you have somebody that has one or more sole trades, each sole trade is going to be one submission in itself. UK rental income is going to be one submission, and foreign property in each jurisdiction is going to be one submission in itself as well.
No shortage of submissions.
That's right.
So
Yeah, I
if you
mean, for
have
some people that are VAT registered, it's going to be unbelievable how many submissions they're going to have per year.
Yeah, it's very easy to get up to 17 submissions a year just with sole trade and the land and property. It's quite shocking.
Absolutely. Okay.
Final question, Andy, about from Kay about if the 24-25 tax return is not filed until 31st Jan 26, HMRC are doing the big campaign for letters in February of 2026. They're writing to everybody they believe will be affected by MTD, but they are starting the process for people that have already submitted their 25 return. They're starting those letters in November. And also, you'll remember earlier on in 2025, they started writing to people who had their 23-24 tax return. Their turnover was over the threshold and they might be affected. They're going to give them another nudge if they've not signed up to MTD. So expect communication from clients from November all the way up to March. And I'm not sure how many people in the chat actually had clients go to them and say, I've had this letter from HMRC. We think that thousands didn't go out or didn't arrive.
Yeah. I think it underlines what we all know is that we want to be doing tax returns earlier in the season. So if you can encourage some of your clients that you think may be mandated to hurry up and not submit in January, I know that that's what we're all doing anyway, that will give you just that little bit of more time to prepare. I can see a question from Ian actually that might be worth bringing up about does this mean with all the different parts to a quarterly update that you need separate software for each submission? The answer is software specific. Different softwares will be able to facilitate different things and will potentially be able to facilitate all of that income that individual has to make that quarterly update, but some won't. So you need to be careful about your software choice and make sure you do your research in advance on that. Onwards, any more questions?
I think we need another hour just to sit through the Q&A, but I think maybe we need to do a couple more slides.
There was one very quick one, sorry. Just answer one. I think Amanda asked one first. I think I might have missed this one, saying she first started with probably a daft question. There's no daft questions in these sessions, no such thing. That's the whole point of the webinar. But what would happen if a client has a year-end 31st of March 2026? So MTD from April 2026, but they don't give me the records to complete the March 2026 accounts before the first filing deadline for MTD. Will this be an issue?
Potentially, yes. So they won't be able to sign up for MTD by April. The issue will be how long after 31st of January do they take to submit their tax return? If they delay and they should have been brought in, at the moment, it looks like that person would accrue penalty points for missed quarterly updates, would be the answer.
Just make sure that they're signed up and they do that first quarter update before the deadline in July, August time next year, and they'll be fine.
Okay, I do want to come to Faye, because Faye has asked the kind of real these are the basics, the fundamentals and the building blocks of MTD. So quick fire questions in order. Do clients pay their tax quarterly now? Are we paying?
No.
There's a suspicion about that though. And Are there 4 or 5 submissions a year, 4 quarterlies and 1 final?
Potentially more, because that quarterly update could be made up of lots of different submissions in themselves. So 4 quarterly updates and 1 final submission, but the quarterly updates could be made up of lots more.
And then the final question, the deadlines. I think we're going to come on to the deadlines.
We're going to come on to the deadlines, so we'll
get that a little bit later. And then
are we ready?
I do love Anthony's question, because this is probably the genesis of MTD therapy. Is there anything stopping apportioning 24-25 over 4 quarters and then just true up in the tax return? We'll come back to that later. Right.
Oh, that's already one of my favourite questions, though.
Keep going. Hit the slides.
Okay, here we go. We'll go to the next one. Good. So we've kind of covered some of these bits and bobs. What isn't included in MTD is really important to get your head around. Actually, I find it easier to think, okay, the only things that are included or are going to be included in your quarterly updates are your rental, your gross rental, and your sole trade turnover. Other than that, everything else is outside of those quarterly updates. And if they are applicable to your client, they're going to be brought in at the year end. It doesn't mean that you can ignore them anymore, but it means that they are not part of the quarterly updates. So that is partnerships, that is, well, limited companies and dividend income outside. Anybody with the turnover from both of those qualifying income sources under 20k outside doesn't need to register for Making Tax Digital, and LLPs, all outside. Of course, if anybody that has any of these sources of income also have qualifying income that is above the threshold for the year, then they are still in. Unless there are a few small automatic exemptions, and those are for foster caring income, shared lives carers, and trustees and personal representatives. So if the only income that they have that could be considered as part of qualifying income, so again a sole trade and a rental, gross rental, are in that middle category there, then they don't need to apply for an exemption. That is automatically exempt. The point on trustees and personal representatives is a little bit unclear at the moment. That's where I'd suggest come and join MTD therapy while we will discuss that and try to work out exactly what HMRC are trying to get at with that. But yeah, there'll be some more information, I'm sure, on that nearer the time. Otherwise, if you've got a client that you think is going to be mandated in April 2026, but they are digitally excluded, have an age or health condition that means they can't do it, they are a member of a religion, which means that they cannot do digital records, or if they have internet problems that are worse than mine are today, then they can apply for a digital exclusion, and that process is live now for those that are mandated for 2016 onwards. So you can write to HMRC, tell them a little bit about the client's circumstances, or you can give the agent line a ring and apply by phone, which we understand is quite a quick process once you get through to the right team. So digitally excluded, though, is not just digitally I don't want to do it, or digitally difficult. It genuinely needs to be quite a case for this person cannot do it for really good reasons. For example, the religious exemption, if the person has a smartphone, for example, then that will probably mean that they are not digitally excluded. Same with internet access. It's got to be in an area which is recognised to not have internet access or capability. So those exemptions are tight. Of course, we haven't seen much feedback from the process yet because it's very new. But again, join MTD therapy and hear all of the feedback on that if you like.
It's where all the cool people are on MTD.
Yeah, and just answering Kay's question really quickly, age is not a factor. It's not a consideration for HMRC.
I think I'd probably play on it, though. I'd probably give it a good go if you've got a very elderly client, because it's unusual to find a very elderly person that can cope with the digital record side of things. But again, we haven't seen much feedback. The wait is something like 28 working days. Am I right? 28 working days for a reply to exemptions, both on the phone and writing. So it'll be a while before we hear anything on that. Tom, over to you.
Yeah. So obviously the first question we get a lot of the time is, how do I get out of MTD? And the rules are quite simple, really. You know, once you're in MTD, it's going to take it probably about 3 years of your turnover being below the threshold before you can actually come out of MTD. If your MTD income ceases altogether, obviously you can then come out a lot easier. But most of the time, it's going to be very difficult, because when you think the thresholds are reducing every single year, unless you're seeing a dramatic drop from now to 2027, you're going to be in MTD for quite a while. And I do expect this will change in 12 months' time. You know, at the moment, the rules are moving. But I would say for now, if you think you can get a client out of MTD next year, make sure you check the rules at the point that you think they can come out, because we don't know if they're going to change in the next 6 months or 12 months. But for now, once you're in, just assume you're in, unless it goes under 3 years.
And that's really frustrating. Sorry.
Oh, no, sorry, Robin, go on. I'm just going
to say it's really frustrating, and this, I'm sure somebody will have a question on this, where, for example, somebody's, say they had £51,000 of qualifying income in 24-25 return, therefore they're mandated April 26, but they already know in the current year they're barely doing anything. Maybe they've got £2,000 of qualifying income. They are still in. They are still going to have to do their quarterly updates from April 26, even though it's now tiny.
So there's been a lot of talk about, okay, what about just incorporating all of your clients? And a lot of people have considered that, and I know many who are actively doing it as well. But a question from Stephen, can sole traders avoid MTD by becoming a partnership?
Yes, so yes, incorporate, yes, making a partnership would get you out of MTD, as long as all of your qualifying income ceases before you're mandated. Okay, so if not all of that income has ceased, you're still going to be in. But yes, you can get out of MTD by incorporating or making a partnership. In our opinion, in general, on MTD therapy, that seems a bit extreme, and probably lets the tax tail wag the dog there, that it's not the fees involved, the additional admin that's involved, particularly with a limited company, doesn't tend to make sense. But yes, the straight answer is yes, you will get out of MTD by doing that.
I guess it's very subjective, isn't it? It's whether you're doing the right thing by your client to advise them to incorporate with everything that comes with that, just to escape some admin. I don't want to do it down, but you've got to answer those questions. So the general feedback from, or the consensus within MTD therapy hive mind is, it's not the ideal.
No, exactly that. If it wasn't good advice before, then MTD probably doesn't make it good advice now. It may tip the balance for a few people, but in general, it's not seen as a viable option.
Let's just quickly in the chat, if you have been doing that, or you're tempted to do that, you think it's a good idea, just put yes. And if you generally think it's a bad idea, just put no, just to do a little straw poll and see what happens.
I'll just jump in as well, Andy, to say that from personal experience, I've had clients where for years, every single year, we talk about the benefits of incorporation, and it's not all about tax. Because MTD is coming in, I've gone back to those clients and said, I know we've talked about incorporation quite a few times, but if you don't incorporate, this is the alternative. Suddenly the admin involved in having the limited company has tipped the balance. So those clients now are taking the advice that I would want them to do for 3 years. So it's definitely worth considering on the ones where you think actually they would benefit from being a limited company, because that is the commercial decision, not just for MTD.
Exactly. And it's that determination. If they were right on the cusp, it's a tipping point. But yeah, I know a number of people who I felt have been advised to do that inappropriately in a number of cases. So yeah. Okay. we've got lots of questions coming in, and I think we'll probably take a lot of these questions at the end. So let's try and get through the kind of core info here, and then we'll come back.
Yep.
So we'll be jumping back into some of these points later.
Sure. So next is just to outline the deadlines that are involved with MTD. So we know that they're quarterly, and you've got two different quarterly options. You have got your standard quarterly options, so 6th of April to 5th of July, etc. Or you can make a calendar election so that your quarters run 1st of April to 30th of June onwards. Whichever you do, your first deadline is going to be the 7th of August, so don't bother booking any holidays in the school holidays. And onwards, your deadline 7th of August, 7th of November, 7th of February. That's the really painful one, isn't it? And then 7th of May. So with the calendar election, you make that for the year. Once you have made that election, you are tied into those quarters for the year on sign up journey, which we will talk about in a minute. You also have to tell HMRC whether or not you're using the standard periods or calendar periods. Yeah.
Do you mind if I just jump in on that one, Robin, actually, just because...
yeah, please do. Please.
Yeah, it's a question that comes out quite frequently, particularly for spreadsheet submissions and what you would need to fill in on the spreadsheets to make the submissions, because we can see there that each of the periods does start from either the 6th or the 1st of April. So it's important to reference the difference between the data that you're submitting to HMRC for MTD for it compared to MTD for VAT. So the information that you submit to HMRC on a quarterly basis is actually cumulative data. So the information that needs to go on the spreadsheet, or what's in the bookkeeping submission to make that submission, is effectively year-to-date information up until that particular period end. So yeah, it should make it potentially a little bit easier for your clients if they are putting information onto a spreadsheet, because they're effectively just appending the same spreadsheet 4 times with that information, rather than needing to have 4 separate spreadsheets to make sure the right data is on the right sheet as such. You have to start fresh each quarter. So yeah, it's just an important reference to make that they are cumulative data points rather than separate ones per quarter, and that comes out quite frequently on sessions we've run before.
But of course, slightly disappointing for those who are VAT registered, because they can't just use what they're using for their VAT submission straight in for the MTD submission. So it does make a genuinely new submission to HMRC. Good. Okay, quarterly updates. So what is the quarterly update? I think I've touched on this a little bit already, that it's made up of the sum of its parts. But it's not very exciting. It's not meant to be a tax return. You'll hear HMRC say that over and over again. These are not tax returns. They are updates. They're meant to be, if you like, informal opportunities to touch base with HMRC on your income. They are essentially telling HMRC that you're keeping a digital record. That is the best way that I can summarize what is a quarterly update. So this quarterly update is one submission in itself. However, it can be made up of those different parts, which can be, I'll repeat it, your sole trade or your clients 1, 2, 3, 4, however many separate sole trades they have, how many pages are they filling in, how many self-employment pages are they filling in. That will tell you how many self-employment submissions you're going to be making for the QU. And then a separate one for UK property, and a separate submission per foreign rental in different jurisdictions. Now, that makes sense because you're going to have different rates of foreign tax credit relief for different jurisdictions. That's why it would be separate. So we've got that stat there. An example, 2 sole trades and 1 rental is going to be 12 quarterly updates. So a huge amount of compliance involved in this. And if you miss one part, so say you have in a quarter 4 submissions to make as part of your 1 quarterly update, if you manage to do 3 of them but forget one of them, that's late. That would mean that you get a penalty point for your quarterly update. So that all of it needs to be submitted by the deadlines that we've just looked at for it to count as a submitted quarterly update. But good news is you don't need to make any tax adjustments or include any reducers like mortgage interest. Of course, you can choose to do some of these things if it makes your bookkeeping simpler at year end. And again, we're not going to fuss over the detail of the quarterly update. We want it to be roughly representative of what's happened for the client in that quarter, but we're not going to obsess over it. We're going to just get a submission in. At this point, it's probably worth me saying that there are some easements around joint rental property. So for example, somebody that owns rental jointly, they don't need to submit anything more than their share of gross rental income for jointly owned properties. So for some of your landlords that do only have the joint rental, that is a nice little easement there. Probably makes absolutely no sense as to why HMRC are requiring this at all, because what information does it give? But the rules are the rules. And I have seen a question come through, if I can just pick it up, about joint rental property. What if there is a couple that owns a rental property that has £50,000, for example, of gross rental income in a year? Do we split it? Yes, we split it. So again, it goes back to that slide that we had of the boxes on the tax return. What is your one client going to have in those boxes, and does it tip them over the threshold? So the 50 for April 26, and that is going to inform whether or not they are mandated. So if their share of rental is 25,000 in that example, but they have a sole trade as well that has £26,000 of turnover, then boom, their qualifying income is 51,000. They're in from April 26 onwards, with the possibility that their quarterly update is going to have, in that example, one for their sole trade and one that just shows the gross rental income without expenses because of the easement for joint rental property.
But they're still,
so, as I said,
two submissions, though.
Yeah, exactly. And potentially in two different types of software, maybe in one, maybe in two.
Maybe three.
They will have to make that. Maybe three, because of their end of year tax return, and of course they'll be using TaxCalc for that. So as I've said, there are not many tax returns. Let's not call them that. And as Nick has already covered, they are cumulative. On the plus for the cumulative side of things, we don't need to worry if they are wrong. If there is a mistake, you just update in the next quarterly update. Something to consider with this is that if you have missed the deadline for one of your quarterly updates, you don't get the opportunity to, or you don't need to, submit that one. You just submit the next one. Once the date is gone, the chance has gone to submit that quarterly update, and that client will have a penalty point and potentially a penalty, which we'll come on to. That you move on, you include your cumulative amount in your next quarterly update. And then, of course, we have the tax return at year end. I would say as normal, but it's not, but we will come on to how that's not quite the same in a minute. And at this point, you really want to be thinking about your PCRT, your professional conduct in regards to taxation, and what's happening with your letters of engagement and compliance. But that would probably be a subject for a whole nother webinar, and again, something we can help you with in MTD therapy if needed. Nick, I love asking this question because I think maybe you should ask it back at me, seeing that I'm testing TaxCalc software. Yep. But how easy is it to submit a quarterly update with TaxCalc? Tell us.
Yeah, absolutely no problem at all. So fundamentally, TaxCalc's quarterly update function is a spreadsheet uploader and filer. Effectively, you fill in details of the income and expenditure on two separate sheets usually, and then that can pull through the relevant categories of that income or expenditure onto a lead sheet. Very similar to, say, for VAT, where you have your 9 boxes. The lead sheet just needs to contain all the different types of expenditure that HMRC expects, such as your rent and rates, any other expenses you have, and then you map those boxes to the HMRC relevant boxes within the TaxCalc system, and then just click submit. So, a lot of people will say that it's just the click of a button. It is not that by any stretch of the imagination, but the vast majority of the work is done in making sure that the spreadsheet is fulfilled correctly. The actual submission process done within TaxCalc is really simple. But yeah, getting the work done on the spreadsheet is the key driver to it. The submission process is really easy.
Yeah, I can absolutely attest to that there's no problem. It's very, as everything I think is with TaxCalc, very intuitive system. Didn't need to watch the video that you've helpfully provided at the start as well. Good. So Tom, your turn.
Yeah, just answering your question there, Stephen. TaxCalc does have videos on their website for how the MTD submission looks for TaxCalc, and I'm sure if you reached out to Nick would be able to set up some demos in the future.
Yeah,
I'll
we're
put a link
gonna,
to that, actually. I'll put a link in the chat for Stephen as well.
Brilliant. So APIs, you're going to hear this expression a lot over the next 6 months, because the APIs, a great analogy someone said to me, it's like a train track. The information goes from one station to another. So if you imagine the quarterly updates, you submit the quarterly update through your software, it goes to HMRC. When you come to prepare the final tax return, the end of year declaration, your software, whichever one you use, and it doesn't have to be the same one that you've used for your quarterly update, pulls the information from HMRC. So there's no communication between software to software. It's software to HMRC and HMRC to the software back. So if you've got clients where you do their self-employment income, but every single year, their husband and wife, but the wife uses a different accountant to do the rental income, you're going to have to wait until they submit the quarter updates and then submit the information for Q4 before you can pull that information down into the software that you're using to prepare husband's tax return. Now, HMRC are going to be using something called HMRC Assist. Now, it's not being commonly marketed yet by HMRC, but effectively, it's a voluntary option. You submit the quarterly update to HMRC, and you can elect at that point for HMRC to check if there is any potential errors or flags that they can see using AI. So that could be, if your quarter update, you've done quarter 2 and your turnover is 100,000, the flag might be you're over the VAT turnover threshold. Do you need to register for VAT? It's not being reviewed by individuals, but we don't know where this information goes in the future. But effectively, it's optional. Some software providers are removing that function, like the ability, they're not even providing it, whereas others are encouraging it. So make sure you keep an eye on that with your software. And then HMRC every quarter will estimate the tax every single quarter and do an estimate for what it's going to be moving ahead. So I am advising my clients to be very, very cautious of that, because they can obviously log in and see what's going on. But if you're relying on a quarter update and you've got lots of different sources of income for employment, and you've got pension income and you've got dividend income, it's only going to include certain elements of that in the forecast unless you put that information in yourself. So be careful. And they've already confirmed in writing that they expect the quarter update estimates be incorrect more than half the time. That's just the nature of these updates. That, you know, they are not. It's not a given that the information is absolutely correct on an estimate, because there's so many factors that's being considered. But we have had a lot of people saying they think the quarter update estimates are really helpful. So it's what you want to take from it, really, is the point I would try and make on that. So I think that's APIs covered and tax year estimates.
Good stuff.
So penalties now.
So penalties, something that I don't see many people talking about, because it's a little bit scary, isn't it? But it's billed as a fairer regime. I will let you decide for yourself, as I have my own thoughts on whether this is a better regime for people. Essentially, HMRC's line is that this means it's less bad for people who spend a small amount of time being non-compliant, and it's worse for people who are long-term non-compliant. That's because instead of getting an instant penalty when you miss a deadline, you're going to get a penalty point. And the penalty points work differently between your quarterly updates and your end of year tax return. So your quarterly updates, and again, let me just say it again, that quarterly update has to have all of its parts submitted to be on time. If you miss that, if you miss one part within that, then your client will have a penalty point for a late quarterly update. And if you miss that deadline, that's it. You're done. You get that penalty point. At the point that you have 4 penalty points, you have a £200 fine, and at every point after that, you will have another £200 penalty raised. So if somebody spends a whole year not submitting their quarterly updates, they will have a £200 fine, and then every quarterly update that's missed after that, they will have another £200 fine. So you can see how quite quickly those penalties can rack up. And with your late tax returns, those are worth 2 penalty points. They have the same threshold of 4 points, but that threshold is separate to the QU threshold, as far as I understand. So you would have your first year, you would have no penalty for that first tax return that's late, and then the second year you would be an instant £200, and again every year after that another £200. And within those penalty points, you have to have a period of full compliance to get rid of your penalty points, and that is 12 months for the quarterly updates and 24 months for the tax returns, all in on time. And it is worth saying that the VAT penalties and the income tax penalties are separate to each other. They work in the same way, but they are separate. So if you have VAT penalty points, they're not added to your income tax penalty points, thankfully, and vice versa. I think we're going to see lots of particularly unrepresented people get hit by these in a couple of years' time and go, what on earth is this? It's going to rack up quite quickly and cause a bit of a stir, in my opinion.
Bit of a stir. Is that a technical? It's a technical.
Yeah, I'm going to join them at the riots. It's going to be fun.
So we've got a few questions coming in about it, and I think now maybe the time, just talking about penalty points, is around that question of nil return. You had the statement there that the accuracy of those quarterly updates is not a factor, but what's the general vibe within the MTD therapy community about posting 4 zeros and then just putting everything into the finalization?
It's a definite no from me.
It's a definite no from the professional bodies. So that's the main gist. The professional bodies, the PCRT has said that nil returns are a no-no. We must not do that. The reason for that is because it indicates that no digital record is being kept, and that could make your client liable to a £3,000 fine for non-digital record keeping. And that is an area that HMRC have said they will look at. So nil returns is going to be waving a flag at them to say, hello, I'm not keeping digital records. Of course, that's going to be interesting for people where a nil return is a genuine return, especially for seasonal workers. There may be some times where a nil return is genuinely correct. We'll wait and see how HMRC deals with that. They may see that they do get asked questions on that side of things. In terms of estimated returns, again, the PCRT does not like this. We're advised not to do that because the point is that we should be submitting records that are representative of our client's circumstances to the best of our ability. The vibe in MTD therapy is that some people still feel that given the push that they may need to use some kind of estimated figures, and that estimate can go somewhere between a real estimate and where that some of the records that the client has given you might not include something because they've mentioned something and therefore you're going to put an estimate through. It's really important to consider your own position, your insurance position, how you feel as an advisor on that. It's a little bit grey.
A grey area. Yeah, I mean, would they be able to issue a fine without doing an investigation, just on the strength of nil returns?
No, they would have to investigate and check if you were keeping digital accounting records, which nowadays, given the fact that we've all got business bank accounts or personal accounts, they would be able to tell very easily that you weren't keeping digital records. So you've got to be really careful not to put yourself in jeopardy by just saying the revenue isn't going to check this. I'll just submit 4 nils and do a tax return at the end of the year. They're aware of it. They have been for a while. So I think when they are pressing that point home, that could be something that is looked at very quickly next year.
Excellent. Well, I didn't want to detract too much, so let's get through to the final return, and then we can get to some of the other questions that are sitting there, and there are lots. So,
do you want to do some more questions, or we go straight in here? Final return.
Do the final return, and then we'll hit some of the questions up.
Okay, good. So the final return is not self-assessment anymore, and that's really quite important to get your head around, because you're still going to probably have some clients that are part of self-assessment and then some that are under MTD, and the difference between the two, I think, is very important to understand. So the first part of your MTD tax return is going to be that you will pull the information into your software for the final tax return. Now, that doesn't pull from the software, that pulls from HMRC's APIs. So anything that has been submitted to HMRC, doesn't matter which software you've been using, your final end of year tax return is going to pull back from HMRC exactly what they have. That's the benefit of that, is obviously you're not going to have discrepancies between what HMRC has and what you're pulling through, because it's direct from them. The downside is that you're not necessarily going to be able to pull through all the backing information from, or you're not going to be able to pull through the backing information, for example, of what exactly every transaction was that relates to the expenses in the categories that you're pulling through. That's particularly important to remember when you have clients themselves that are going to be submitting their own quarterly updates. So you might want to get the records from them to do your normal checks. You then make any adjustments that are necessary on, for example, we've already said that we don't have to include some tax reducers. We don't have to include potentially personal use in the quarterly updates. We can do that at year end. We're going to do that. We're going to make it exactly how we would make it for a self-assessment tax return before we send it to our client, before we're happy with it. Then it's a case of bringing in all the client's other income exactly as we would do in the normal process. That tax return is still going to include all of their income from all sources as we normally would. Now, this is where it becomes a little bit different. Under self-assessment, of course, we then go and ask our client, are you happy with this? Can we submit it? And then we submit it. Great. That's the end of it. Under making tax digital, there is a little extra step here that we have to submit the information to HMRC, have them ping back a calculation. Don't worry, that is a very fast process as far as we're told, an instant process. It is then that tax calculation that you have to agree as the submission of your return. So you are no longer self-assessing. You are now agreeing an HMRC calculation. Now, 99% of the time, 99.9% of the time, there's going to be no problem here. It's going to be unusual for the revenue to ping back a legally incorrect tax calculation. It does happen, doesn't it, with some complex cases, but we're talking about very few in a year. But the point is, you really need to be thinking about your processes around client sign-off and when you want client sign-off, and you really should be looking at the PCRT, again, the professional guidance. Have a look at what you think about that professional guidance for you and your firm, and part of this process again is thinking about how you want to deal with this. But let's ask Nick the question that's on the screen first. So how does TaxCalc pull through the APIs for that final return?
So to be clear, HMRC actually haven't built their end of this bit yet. So no provider that is going to pull through that information through is able to do it yet. But we have had confirmation from HMRC that they absolutely will have it designed for us to be able to pull it through. But the whole point with that is that, as Robin mentioned really nice and clearly, that no matter what system your client is using or you are using to make those submissions through to HMRC on a quarterly basis, that is right for that client, whether it is a purpose-built bookkeeping solution like a Xero, QuickBooks, or a free agent, or maybe something like a Hammock for your property clients, or a spreadsheet through TaxCalc. It's going to be one consistent process to pull through that information into TaxCalc for your year-end submissions, to make it easier for yourself and any staff members, if you are at a slightly larger practice that have additional staff, rather than needing to understand 4 or 5 different year-end final declaration process that I think it was called. It changes all the time for that 5th submission. Yeah. But the point is that it just makes it consistent, right, to make it through. Also, if you're using one system to make all of your final tax return submissions, you can then report on it. For example, the report that I think someone asked earlier in the chat to run in TaxCalc that says, which of my clients are going to be relevant for that first quarter submission come April, May and June 2026. You can run that report in TaxCalc because all of that data sits there for the prior year tax returns that you've fulfilled in the software. If you're doing final submissions in TaxCalc, in Free Agent, in QuickBooks, in Xero, in all these other products, you're not going to be able to report on that for future purposes. So having a consistent location for that does make it a lot easier later on down the line.
Good. So we'll move on. I can see time's running out. And we've got
I'm
lots of
running low on time.
right. I tell you what, I will speed through this and just say that the registering process is something to really consider now. If anything, that link that we have on this slide is a really good way of looking at what's involved on the sign up process. That is a TaxCalc produced screenshot of the process. It takes around 4 minutes per client is what we're fed back. So have a look at that yourselves when you get these slides through and the details through after this webinar. And we just wanted to talk a little bit, if that's okay, about what we're trying to accomplish in the MTD space. This is Tom's baby, so he's going to talk to us about this.
Yeah, so we're finding that a lot of accountants are now coming up to the busy tax return season, and with all the will in the world, I've lived and breathed MTD for the last 10 months with a lot of other accountants. But even I'm having to say, I've got to focus now on all the last tax returns that are coming in, the stragglers, my March limited companies where they've left it late to drop the records off. The next 2-3 months is tax return time. So a lot of people aren't going to be focusing on making tax digital, getting up to date, getting the records done. So in February of next year, we're going to do a peer support group for accountants and bookkeepers who want to get ready for that first quarter update submission next year. So in February, we're talking about what you need to do to communicate with clients, your client segmentation. And then each month, we're going to be talking as a peer group over webinar about how we're finding it, talking about the rules, talking about what's going on, and actually supporting one another. Because I think we're now in 2025, as accountants and bookkeepers, we need to be collaborating rather than, competing as such. We can all work together and have a fair share of the pie. And actually, really, it's about understanding how we can help one another to get the rules right, not make any mistakes, because we're going to have a huge shift, the biggest shift in 30 years to our workload. And if we don't get ahead of it, we're going to have problems next year. So working with us through February onwards for members, that's going to be a great thing to do every single month as a peer group.
I think it's wonderful what you guys have done. And I think one thing that we haven't mentioned is, and I think Nick was going to talk about this in the context of onboarding new clients, the expectation is that there are going to be an awful lot of people who are hit by this, who then seek out the help of an accountant or a bookkeeper to be able to do those quarterly submissions and just understand how they're going to be compliant. And that's going to bring an awful lot of people into this market on top of what you're doing. So, Nick, I think you were going to do something around that onboarding section.
Yeah, so I appreciate, the vast majority of MTD is always focusing around making sure that you're doing your quarterly submissions correctly and bringing through the correct data. And I think that should always be the starting point, hence why we're at Basecamp, right, for that purpose, right? But I do think that once you are happy with the information which is being submitted and you're happy with your processes of how you're going to go through doing that, I think that once we are past that stage, and this might be something for a second or third webinar potentially with Tom and Robin, is making sure that you've got the processes in place to manage that workload, whether it be having the capacity internally with the team to be able to make those quarterly submissions, whether it be by having a proper robust client onboarding process with proposals and engagement letters already built into that onboarding process. So with a system like Engager and TaxCalc, you would be able to manage that through the process. But I appreciate that this is the starting point of that MTD journey for most people on the call, and that is totally right and totally understandable. I think that once everyone's comfortable with the submissions process, we will be looking at how do you actually manage that on a day-to-day basis, probably later on this year and into the start of next year to help you with that. But yeah, TaxCalc and Engager can help you with that, absolutely.
Excellent. Yes, we do. We've got but particularly that I think a lot of people are concerned that another even 20-30 clients knocking on the door in the run up to April is going to probably be something that may break them. So you need to get your processes. And that we have had some questions in about how do you charge for this? And I don't think we've got time to address those huge questions right now. Please, if you are struggling with that, MTD therapy is a really good place because lots of people have put a lot of thought into that, and that's where you can draw on the knowledge of other people. I think we may need to run over just by a few minutes. If Robin, Tom, you're okay just to run a few minutes over because there's so many questions. So let's just dive back over some of the ones that we've had. So in terms of, I mean, we've kind of gone over these, but I think people just want clarification. Will we be able to amend quarterly updates with Rebecca?
Within the time frame, so as long as you are before the deadline, yes. If you're after the deadline, you just submit the next one.
Yeah, but you can submit a quarter update as many times as you like, so long as it's on time the first time.
So do HMRC have an agent login? We haven't really talked about the ASA on that slide that we skipped through, but how's that being set up? What do you need to do to make sure that your clients are registered?
So that would be through the ITSA login. You need to pull over your clients from the online services login, and then you should have access to be able to register them on their behalf. It'd be worth looking through that link that we shared earlier to have a look at the process there. If you don't already have an ITSA account, you will need to get one.
And that process can take, I mean, it's minutes, but for each client.
Yeah, 4 minutes is the estimate for each client.
4 minutes for the estimate. And on the note, one of the questions that often comes up is, how the hell do I easily tell which ones of my clients are in or out? And I think, Nick, you can speak to that particular question.
Yeah, absolutely. So in TaxCalc, I'm sure the other providers can also run the same thing. Okay, but as long as you have used the software for a full tax year, there's the ability to run a report within these softwares to identify which of your clients are going to be required for that first for MTD for next year. It's always worth running it on, say, 2024 data that's within TaxCalc, because that's a full tax year. But I appreciate the 2025 ones will only really be relevant once you've inputted all that information in, probably until the end of January. So it's definitely worthwhile running those reports within the system to identify which clients are going to be included for MTD purposes and who you need to be notifying early that potentially there needs to be a potential pricing change. Yep, and what services you're going to need to offer them next year. But yes, you can run that within TaxCalc, and I'm sure the other systems as well that you've been using for end of year tax returns.
So if you do want to follow up on that, I'll be putting a poll up later to know if you do want to be contacted, and we can show you about how to run that within TaxCalc. But it's a very quick report that allows preset just to say, run this and tell me which of my clients are going to be included. Right, 2 more quick questions. Just to confirm, if a client is over 50k self-employed but profits in 24-25, but has incorporated in October 25, do we simply ring HMRC and say, get this client out of the MTD system? I'm sure it's that easy.
Careful not to get it confused between profits and turnover is the first thing I would say on that.
Yeah, it's 50k profit.
MTD's turnover. Yeah, and to be honest, I don't know the actual process of getting out of MTD that well, because at the moment I still don't think there's a huge amount of info, but Robin is in testing, so she should know.
So you would go and register the client for MTD, but then you're able to tell HMRC that their sources of income have ceased. So you go through the sign-up process, but then notify HMRC that all qualifying income has ceased.
Okay. And then finally, do we need to bring all self-assessment clients into the ASA MTD account with HMRC and then use the ASA login codes for everyone on TaxCalc, including clients that are not under? So I think there was another question around this as well, which was essentially around, are you bringing everyone into MTD, and then if they're qualified, they're actually doing it under MTD or not, or are you leaving them out?
So no, the one you will use the ITSA account to deal with MTD, and you will still have your online services account to deal with your self-assessment clients. So
they will remain separate until they flag as someone who needs to be included.
Yeah, ultimately, there is going to be a shift over to the ITSA at some point for everyone, as far as I understand, but that's far away. So yes, there will be a split system for a while.
Excellent.
It's important to remember that it's national insurance numbers that MTD is based on. It's not UTR numbers. So if you don't have NI numbers for your clients, start getting hold of them now.
A very good point. A very good point. Okay, we have come to the end of MTD Basecamp, probably MTD Basecamp 1, we should be referring it to. I sense there may be more. I would like to know, if you have been to MTD Basecamp today, And I've just posted a poll in the poll section, and I'd just like to know whether you now feel whether you feel more confident or less confident about your journey towards MTD compliance. Be very keen to understand what impact this has had. We hope you found it very, very useful. And it looks like a little more confident. We have had a positive impact, gang, on the confidence levels of accountants, which is fantastic. And a couple of people are much less confident. I don't know where they started. They started really confident. If they started at the bottom and they're now worse, I have every sympathy for you. And then there was one final poll. So if you've been through today and you would like to find out anything more about TaxCalc, if you'd like to find out anything more about Engager, which is our practice management solution, and if you'd like to find out anything more about MTD therapy, indicate so on the poll that I have just posted. We'll contact you, so either it'll be Robin or Nick's team or the Engager team will reach out and make sure that you understand what those solutions can do, will do, and how you can take advantage of them.
You can select multiple options on that poll, by the way. No, sometimes it's just one at a time, so you can select multiple.
Yeah, I managed to do that correctly, Nick. I was quite pleased with myself.
It does some. You do surprise me every day, Andy.
I know. I can drive the poll machine now. Okay, so my camera started misbehaving as well. I just wanted to thank particularly Robin and Tom from MTD Therapy. What you guys are doing is fantastic. It's a really, really valuable service for the whole profession. I want to thank Nick for coming along and spending his time showing us about the software. I want to thank you guys, for everyone, for showing up to MTD Basecamp. We're all in this together, and we want to get through it. So I salute you all, and we will let you know the next step of the MTD Basecamp as soon as we have got the feedback from all of you about how useful this has been. So fantastic. Thank you very, very much. We will sign off. The best of luck. Take care.
Thanks, everyone.
Bye.